Good morning, everyone. Let's see, Nitin is the only guy who's walked up with a briefcase, either with money or one of those nuclear codes or something, I don't know.
The checkbook is in here.
Okay. Hey, before we get started, to help us customize what we're going to try and speak about this morning, quick show of hands, how many entrepreneurs in the room today? Okay, fair bit. Investors? Great. That's good for me and Deepak, that is.
We actually have all the investors sitting up here.
There you go. And so I thought the way we'll run this is pretty informally. We've got a nice mix of 2 startups and 2 founders at the 2 startups, and then 2 investors. Deepak, who does a little bit more earlier stage, and Nitin, who does a little bit of growth stage capital. So good balanced panel around what the hell's going on in e-commerce, where the opportunities lie, and we'll get to hear both sides of the coin here. A good way to start, though, before jumping into, how do you get profitable and how fast can you get profitable is, let's try and first get a little bit of a level setting of what makes an e-commerce business, what comprises an e-commerce business, what are the different constituents, if you will. And I'm going to call on Radhika to maybe just take a couple of minutes to just lay out in a little bit of a business 101 of what an e-commerce company looks like from the inside in terms of the different lines that she's got to worry about when she thinks and looks at the P&L.
Thanks, Mohit. Great to be here, guys. Even before I get into that, I want to take a step back and say the name of the panel is Profitability the Alibaba Way. High time we change that.
Good.
We need to get an Indian company up there and say profitability, maybe the ShopClues way or the Infibeam way. Next year, perhaps. We should all be there. So Mohit, great way to start, and I'll tell you a little bit about how we look at business at ShopClues. I don't think it's significantly different from the way most people are looking at it. There might be one line item here and there. There are basically 3 large buckets that we manage to. Even before that, we actually manage our business to contribution margin. Now, for those of you who are entrepreneurs and investors, of course, understand it completely. But that's really the best way for us to look at it, because that's a number that can be drilled down to the product level for us. And even the most junior, most category manager can manage to that particular number. So the contribution margin has 3 buckets. The first one is the revenue, of course. So transactional revenue and non-transactional revenue. Now, transactional revenue is the commission that you make out of it, and non-transactional revenue is what Alibaba does, the advertising revenue that they get, and any kind of products that they push out to the platform for the merchants, and any revenue that they get from that. So that's one large bucket. That's where the money actually comes in. Then where does the money actually go out? In that, there are 2 buckets. One is direct costs, which is payment costs, any kind of fulfillment, logistics costs. So any costs that are associated with shipping a product out, shipping an order out. So that would be the direct cost. And the second cost bucket is the variable cost. Now for us, we look at variable costs slightly differently. One component that's very common, or that's common across all e-commerce platforms, is the performance marketing part of it. So any kind of digital campaigns that you run, any kind of affiliate campaigns, social media campaigns, all of that will come in performance marketing. The other component that we have in variable cost is the contra, or the discounting that is done. So contrary to what everybody believes, contra marketing or discounting is very, very little at ShopClues, but it is a big component on most of the P&Ls of Indian e-commerce companies. So that's an important component over there. Apart from that, there is some variance of, some customer support costs, some fulfillment costs is taken in the variable as well. That gets you down to the contribution. If you are running your business at a positive contribution margin, I think that's a great place to start. And I'm hoping one of these gentlemen will write a check for that business over there.
There you go. Sure.
And under contribution margin, we should be looking at pretty much only branding, and then the OPEX, the operating expense to actually run the business, which includes the wage bills, the rents, et cetera, et cetera. That brings you down to the EBITDA, which is the burn, which is really the number which nearly all of us should be managing to at all times, and especially in days like these where capital is not easily available. That is a very, very critical number that we'll be managing to.
Awesome. So I hope everybody got that. That was a good inside view around contribution margin being the single most important unit for these companies, rather than worrying about any one particular line. But before we go deeper, and I'm going to go deeper into that in a minute, let me just take a step back, and Nitin, maybe get you in here, is if I'm a young entrepreneur there and I want to start an e-commerce business, at least the way I view it, there are probably two large models I can choose from, that of a Amazon or an Alibaba, almost a marketplace which is lean and mean, or a little bit of a full stack. Talk a little bit about what she spoke about from an inside view. Talk a little bit from the outside in terms of if you were looking at an e-commerce business to see which was more valuable, and you wanted to see the mechanics of what that business looks like, compare and contrast these two different models for the entrepreneurs.
Yeah, I've been spending some time over the last few quarters in various segments looking at some of these aggregator models and full stack models. So, I mean, you're seeing it in hospitality. There are aggregators like Make My Trip and Stayzilla for hotels, and then there are full stack players like Oya Rooms. You're seeing it in food services. There are full stack models like Fasos, and there are aggregator models like Swiggy. One of the areas that I have been spending time on when I think about when does it make sense for an entrepreneur or a business to be full stack, and when does it make sense for it to be a marketplace, is what are consumers really valuing from the business? What is the value proposition you're offering? I find that when selection and liquidity and long tail matter a lot, I can understand why you would try to build an aggregator business. You're trying to bring as many different suppliers on the platform. However, when consumer experience matters a lot, then you may want to own that consumer experience, and you may decide that you want to go all the way back into the value chain and even own the supply and the delivery of that supply. I think the jury is out with respect to which of those models will scale, because these are all actually very new models that are emerging even globally. India is one of the earliest places where you're seeing these models actually develop. For example, I remember when we were looking at, say, Oya was a great example. We hadn't seen a model like that in many other markets. So I think India is going to be a great sort of testing bed for these models. But at the same time, I think it's very interesting that some people say, it's not enough if I'm, let's say, building a platform of maids, cooks, and drivers. It's not enough for me to just get as many maids, cooks, and drivers on the platform. I have to really focus on, vetting them and training them and ensuring they're actually able to deliver a service that consumers value.
Deepak, I want you to chime in on the same thing. One of these entrepreneurs came to you, they were looking for advice. It wasn't a formal pitch to SEF, but they're looking for advice on how to design their e-commerce business that they're starting up. Where do you sort of point them in terms of the type of model that you choose, or any other advice in terms of structuring their business for e-commerce?
Yeah, so I think adding to Nitin's point, I personally believe it's largely a function of the category that you're going after. And we don't need to go far. You go into real life and see what's happening on the offline side. So if you go to a supermarket where there are hundreds or thousands of FMCG brands, food brands, and they all standardize, the product quality question is already solved, it makes sense to have a supermarket. But if you want to buy furniture, for example, where the depth of the selection, the service requirements later, or if you want to buy electronics, you would probably go to a specialized store. So I think we have to translate the same behavior online, that if the depth of the selection, and more importantly service, or understanding the customer requirement is very critical, there is some amount of personalization required, then a marketplace or a horizontal will struggle to solve that problem. I mean, you can buy electronics at Big Bazaar, and I think they tried it, but frankly, that's not the desired destination you would always go to buy electronics. I think a similar behavior goes that way. The second is obviously in terms of capital intensity, and what is your scale versus capital intensity aspiration. If you are going full stack versus a marketplace model, the initial capital requirement will be higher, because you are solving the nuts and bolts of the business right from design, selection, warehousing, delivery. Initially, your scale-up will also be slower, but eventually you will have a far more defensible business. So I think those are the true trade-offs, and where your comfort lies is what you would choose the model on.
I like that. So look at the underlying supply and how well it's evolved before you decide which model you go under. I like that. That's good advice. I think that's really important for you guys if you're starting a new business, to sort of be pretty clear about what Deepak just alluded to, because later on it's pretty hard to switch, and you need to sort of set that right pretty early on in the journey. I'm going to switch to Neeru for a minute, who obviously has experience running Infibeam, but also helping others run their own e-commerce platforms. And ask you the question around, you heard contribution margin from Radhika, you heard about it depends on marketplace versus full stack from these two investors. In your experience, if we had to try and answer the question that the panel is all about today, which is if you had to move towards profitability, what are the top 3 levers that you should really care about?
See, I think as Radhika pointed earlier, contribution margin definitely. I mean, each of our platform partners who are using our solutions in e-commerce, contribution margin is a key driver. Second, there is a customer, cost of acquiring a customer. When you talk about cost of acquiring a customer, yes, it includes all the marketing expenses on a variable basis that you are doing to acquire each and every possible transaction. And then also you follow this customer lifetime. You need to track the churn rate of the customer, the average customer order value. Is it growing? Is it not? What is the average customer order frequency? So once you get into all those different marketing metrics is where the profitability question starts getting solved. Because we had a pre-panel discussion and we were discussing on how e-commerce very closely correlates to what happened in the telco sector, and there was a lot of customers switching from one to the other, and it was only based as a plan. But the primary difference which I see is there was a cost to switch, and you couldn't switch your telco plan for every particular call you wanted to do, right? But in e-commerce, the bigger challenge is that if a customer is looking for a price deal, then he's looking for the best price point. And how do you make sure that this customer also cares about the other selection and what could he potentially also buy? How do you make it more targeted so that the average customer order frequency keeps increasing and there is minimum churn you see for a customer who you spent good amount of dollars to acquire in the first place?
So you bring up a good point. Tough to differentiate. Price becomes the primary way people are buying and selecting. And then in the US, we had this juggernaut called Amazon, incredibly successful, and still there was this small little company called Zappos. And Zappos came from behind and chose this one very niche vertical around footwear and women and built a very valuable business. And for those who don't know that story, it was based on just incredible customer experience. And we'll have one of the panelists talk about that in a minute. But let's balance and trade off those two things. If you had to go for differentiation to try and build more loyalty, how do you balance, and let's hear the investor view as well as the Radhika's view to start off on the founder, talk about realistically, I mean, not the pretty words. Realistically, is this the time to focus on incredible customer experience at whatever cost, or are there other things on your mind to differentiate?
So I'll talk about customer experience in a bit. I'll
Okay.
go back to what Neeru said, and value is table stakes. It just is. E-commerce value is table stakes. Whether I'm buying an iPhone 6 or I'm buying a 3,000 rupee smartphone, I want to pay the least amount that I can pay for it. The Indian consumer, and I'll use an example from our basic sabzi khareedne jate hain, we want the dhania and mirchi free with it. It doesn't matter whether we bought sabzi only for 50 rupees or we bought it for 1,000 rupees. We want that value.
Sure.
And it's just inherent in the Indian consumer, whether we're talking about the more affluent consumer or whether we're talking about the mass consumer. The way we've tried to differentiate ourselves is less on the customer experience part of it. Because our thought was when we entered Indian e-commerce, there were a lot of larger players who were doing a fairly good job, but they resembled malls more. We wanted to cater to the mass market, and we wanted to bring the bazaars online. And honestly, the only way to do that was through a marketplace. So I'm not going to go through the rigmaroles of that. That's really the only way to do it. So the way we look at ourselves, we're really in a brand that you guys have probably never heard of, but we have a 16-inch Chrysin for 4,000 rupees. It was a hot seller during Diwali for us. So I think there are many ways to differentiate yourself, which is the customer you're targeting. What are the products you're bringing online? What are the categories you're catering to? So customer experience, yes, Zappos, beautiful story, love it. Very difficult to take Amazon head on. They did a fabulous job. But I think we're doing a fairly decent job as well, not entirely focused only on scale. If you measure us by GMV, definitely we're much smaller than the rest of them. If you measure us by orders, we're really up there, comparable to the other players as well.
And just to understand, Radhika, you're saying your difference is the long-tail supplier?
The difference is the unstructured categories that we play in.
And so just peel the onion on that. If I was a young entrepreneur now and I wanted to, replicate that or learn that in my own vertical category, what does that actually entail?
So fashion, and I might be kind of अपने पैर पे कुल्हाड़ी मारने की बात हो रही है थोड़ी सी, but let's look at fashion, right? Myntra, Jabong, what is everybody playing at? They're playing at branded fashion. You're looking at Puma, you're looking at Nike, and then comes LimeRoad, then comes Craftsvilla, who brings in unbranded fashion, who brings in unstructured categories. The fact is that how many people actually wear branded fashion in India? So for all the hoo-ha about the Myntras and Jabong, and no offense meant to either one of them, including Flipkart and Snapdeal, which continue to talk about the Nikes and the branded fashion, the largest growing category, et cetera, but there is this huge demand for unstructured categories in fashion. So cater to that. Another category in the same spectrum is branded fashion at full price. There's really nobody in India who's really catering to that. Is there a fashion destination in India today? Myntra, Jabong, both of them playing at discounted fashion. Purnia's pop up more on the designer side of it. The mall, who's actually brought that online?
Okay. I want to get the other panelists in on this point, which is how do you build differentiation in your business? What things have you guys tried or seen in other businesses that would actually help guys who are starting afresh?
Okay, so if I talk about Infibeam.com, of course, as I pointed earlier, so we differentiate product selection in a way that there are certain products which are hot selling and on which we know that we are going to get a potentially high amount of traffic and the conversion rates are going to be high, and we know that these are the most searched products on the internet, and there are too many analytic tools for us to be aware of that now. So in case you could drive that customer to make that transaction and then track his lifetime and monitor what else he could potentially purchase. So there is a way to acquire the customer first, and then we make sure that he keeps doing a repeated business with us, right? So it's not that I mean, so I don't want to dig deeper into our own business model, but you don't need to take a loss necessarily on each and every transaction you do. But it's just about deciding which products are the ones which you want to make most price competitive at what point in time. Having heard about the Zappos example, I'll tell you, so I was working with Amazon, and before moving to India as Infibeam, I completed the Zappos acquisition because I was heading M&A finance there.
Okay.
So I met Tony and I visited their premises multiple times, and the kind of culture and values that they've built in their premises is very customer centric. So there's a difference between customer satisfaction and customer obsession. So I think they are to the point of a customer obsession, where in India, I think customer satisfaction is what we need to achieve at this point in time. There's a lot of investment. So some really learned men on one of the logistics panel told that the .com part of the India was solved, but the www, which was wagons, wheels and warehouse, that was still not solved in India yet, right? So we need to get into the customer satisfaction levels. Customer obsession will come much later, and it is not necessarily required for all product categories.
Sure. But since we have you here and you had a ringside view, and I'd like to be aspirational. So 5 years later, I hope you're sitting on this panel saying we want to get there. Talk a little bit about what you learned via the Zappos experience of how they actually went for obsession. What did they do, anecdotally?
Okay, so what I can tell you is that each and every customer care executive at Amazon did have the at Zappos did have the liberty to make a decision, which could be about replacing the product, which could be about sending 5 stacks of products. I'll give you an example where a customer purchased a product, and when the product was delivered, he had some accident and he expired, and this product could not get delivered. So the Zappos team went themselves and they offered a tribute. I mean, so they took those flowers and everything to the customer. So that's the level of customer satisfaction. They don't count their customer service team metrics as the average amount of time per call. Rather, what they do is, was the customer satisfied? Did the customer say thank you at the end? You could spend 5 hours on a call. So that's the kind of cultural mix they took. They knew all their customers by name. So it was an entirely different culture, and that's the reason it is built off and spin off as a separate business. Even after an acquisition by Amazon, it is a completely separate business run on its own.
Okay, great. I'm going to shift gears a little bit and get Deepak and Nitin in now. Young entrepreneurs wanting to start an e-commerce business, clearly we are at the tip of the iceberg in terms of the mobile penetration and internet usage in this country, so there's a lot more to be built. You have a ringside view, Deepak, in terms of Urban Ladder, First Cry, and Paytm into both what I would call horizontal as well as verticals, guys going in these marketplaces. As you sit on the vertical side and you start seeing people really build in very unique experiences down those verticals, help a new company that may not want to go up and compete against a Snapdeal or a ShopClues or a Flipkart or an Amazon, but wants to go into a new vertical that hasn't been explored yet. What is the sort of set of questions they should be asking themselves in terms of figuring out whether this actually deserves its own vertical in the first place?
Sure. So I think a few variables, and the most important variable if your aspiration is to build a large business is how large is that vertical. So it is always possible to create a vertical in anything, any category, any product you consume, but how large is that vertical today and how large it is going to be next 5-6 years is an important question. Because that's one thing which I see when I meet many entrepreneurs is that while it is an interesting problem to solve, but it is not large enough. So that's the first thing that I would say. The second thing I would say is that what I was mentioning earlier in terms of what is the pain point that exists today and how large is that pain point. Would you end up creating a market for horizontals who would then come in, discount you out and until you are shut and then own the category? Or you are solving such a fundamental problem that no horizontal will be able to replicate what you are doing. And categories like furniture, laundry are some examples where horizontals have struggled for a while because there is very detailed amount of solutioning required. So I think those would be the two most important things if you're going about building a vertical.
And I'm sure any young vertical company would be really worried about, is Flipkart planning to get into this or Snapdeal planning to get into this? As he sort of goes about his business building out, and it takes time to build supply chain and builds time to build the entry modes you're referring to, he's got a battle for a customer acquisition spend because those guys are in many ways going after the same guy. Do you think he's at a disadvantage because his frequency of purchase is going to be lower than a horizontal? How should he think through metrics around CAC?
So CAC would be out of whack for any vertical player to start with because of exactly the same reasons. I mean, it's a mathematical funnel from visitors to people who spend time on your site and eventually convert. So your CAC would be very high. Definitely, in that sense, if you're choosing a vertical, it makes sense either to focus on categories which have large ticket sizes or the frequency of purchase is very high. So overall, your CAC on a yearly basis comes down low. I think the third thing that I would add to these two is that you have to ensure that your because even if horizontals get in early enough before you have built a brand or scale, you unfortunately will have to be almost obsessive about customer service because no matter how hard horizontals try, they will not be able to spend that much time on customer service early on in the life of the company. So the trade-off between unit economics and customer service in the first 2-3 years of the business has to be tilted toward customer service. Eventually, obviously, 3 to 5 years later, you should look back and say that is this yielding me unit economics? Is my CAC coming down? Is it helping me getting referrals or not? But if you make that trade-off too early on in your life, you will have a tough fight against horizontals.
Great. And just to follow up, what sort of new verticals are you seeing emerging in terms of over the next 12 months where VCs like you and I would put money into?
So I think large markets like food, for example, are still very underpenetrated. Organic food we have been talking about as a country for 5-7 years, but at least now with the online platforms becoming more prevalent, we are seeing interesting companies which are coming up. There is no market size cap. there is a whole range from 100% organic certified to healthy foods, and I believe something interesting could happen there. Similarly, on the apparel side, I think still there is a lot more work to be done, whether it is just a inventory owning vertical or it's fashion discovery and other verticals. So I would say those two are still very large categories which there is some way to go.
Great. I'm going to request for the mics to start getting handed out and folks to start thinking through questions that you'd like to ask the panel. I'll ask one more to Nitin while the mics reach you, and then feel free to put up your hand and we'll take questions. Nitin, so Deepak laid out a case for starting new vertical e-commerce businesses, and he lined up, food and apparel and others. If I'm an entrepreneur right now, you're seeing this big e-commerce boom happen. What other kind of businesses get built on the back of e-commerce that you think are interesting opportunities for these guys?
Yeah, sure. We as a firm have actually invested in a number of what we call e-commerce enablers, which is ancillary businesses focused on e-commerce. Logistics has been a huge area of interest for us. Obviously, if so many packages are going to be delivered or need to be transported in this country, that creates opportunities for third-party logistics providers. It's possible that many of these e-commerce companies are going to rely on those services to scale their businesses. Payments is a huge area of interest for us. I mean, if you were to think about cash on delivery being a pain point for many e-commerce companies, are there companies which can provide solutions to get the cash back into the hands of those companies so that they can continue to scale and grow their businesses, whether it's online payments acceptance or offline payments acceptance? We've also seen some very big, interesting businesses emerge in software. So companies that actually conduct or provide platforms that enable e-commerce enablement. How do we get small merchants online? We've actually invested in a company called Capillary, which has a platform which provides e-commerce enablement to offline retailers. They acquired a small company called Marchac, which does that. So obviously, if you're a retailer, you also want to compete against Flipkart and a Snapdeal. You want to control your product, you want to control your brand, so you want to build that online connect. And then lastly, I think there's some very interesting affiliate businesses which are also going to emerge, which are businesses that actually work with e-commerce companies to actually drive traffic to their sites. Those are ad networks are a great example of that. There are a number of deals businesses which you're seeing, couponing businesses, and the goal is how do we acquire traffic, provide useful information to consumers regarding the availability of deals, and eventually directing that traffic to e-commerce companies, which will then monetize that. I think there's some very interesting businesses.
I would say no as well. So it's interesting. Both the entrepreneurs are much more bullish than the investors on the panel on profitability. Well, thank you very much, everyone, for taking time to do this.